First, though, this is going to be, I think, the last midweek review that isn't available to only subscribers. I'm not sure if this is going to be available any further past this week, but as a lot of you know, I had surgery this week, so I wanted to let everyone know I'm okay. My arm is actually doing surprisingly well. I had to do my other arm about 2.5 years ago, and I'm surprised that this went as well as it did. I've been using it already. It's actually quite remarkable. So let me get this broadcast started. Okay, so let's begin. This is the midweek review. A good amount of stuff to discuss. I have a little bit of a list down here that I wanted to talk about, and then I had the stuff that you all wanted me to mention. I took down some notes. A couple of big macro themes I want to talk about that I think will kind of cement some stuff in for people. I know that we can often get a little bit too caught up in the 5-minute charts or the 15-minute charts and kind of forget about the sort of the bigger macro picture. So I'm going to do my best to cover that. Let me pull up some interesting charts for people. First and foremost, let's talk quickly about what's happening in the S&P, which I think is really very key here. And I think this will help really bring it home. I just wish these charts would cooperate a little bit more. Would really bring it home to understand what's happening and how the mechanics of the market really work. Hope you guys don't mind my glare protecting glasses. If you don't have a pair of these, by the way, I highly suggest getting them. They have prevented. I used to finish my days with massive migraines, and now not so much from the eye strain. All right, so let's talk about SPY. So you had a series of events: the Charlottesville decline, and then the North Korea nuclear test, which took the market down in pretty epic proportion. You could see there was a bit of a topping tail here on the 8-8 day, but I remember I said I was talking to a buddy of mine I think it was in one of the messengers that I use, not one that's public either. A fellow, a guy who I'm friendly with who's a trader, and we both agreed that the reversal this day didn't feel like a top. It felt like the market just was a bit of a look above and fail, but it didn't feel like the meaningful excess that was quote unquote auction ending. And you did get a bit of a pullback. The next day was lower, but it closed okay. And then you had the Charlottesville news, bounced off trend, right? Then we had this gap up and came to a lower high after a 3-day rally. And then you had the North Korea news, which took the market down below that low, and it came down a little bit. We didn't even quite get the 100 MA. But you did have a gap up. What was this? The following, was this the Monday or whatever, the 22nd, Monday or Tuesday? And then you had multiple days of consolidation in here. You had the initial gap, 1, 2, 3, 4 days of consolidation, then another move down, I believe on news, that filled the gap, and this was a look below and fail of the range, and then it came back up very violently. When stuff like this happens, this should have been the clue to not be so short. You kind of want to get to the sidelines, and if anything, maybe even think about another move to the in the opposite direction. We got it. You got this continued the squeeze higher, a lower high here, and a bit of a pullback move to the 50 MA. Now you have to keep in mind the way that the market works. Everyone talks about, and they teach this like doctrine in school, and I can't even tell you how many times I got yelled at in business class telling professors that there's no such thing as efficient markets because human beings aren't efficient. So the creations of humans can never be efficient either. Yeah, I did very well in school, but I don't think that particular professor liked me all that much. It was sort of like back to school when Thornton Mellon kind of raises his hand with Dr. Barbet and tells him, what's the product? And he says, widgets. And he says, try telling that to the bank. It was sort of like one of those experiences. But yeah, anyway, you had this pullback. Keep in mind, you still have people, maybe not so much people from the Charlottesville, but you definitely still had people, I believe, short from North Korea. Because look, this one took it back fast, so they probably got stopped out quickly. So this shook out a lot of longs, sucked in a lot of shorts. They got whipsawed, then were rewarded, or people who had bought this up got shaken out. So you have a ton of people still short in here, and probably still playing hopefully in here. Probably people were adding maybe some to the position, some got squeezed. So the squeeze begins. It makes a lower high and pulls back. You had this big kind of gap down day. And I said in the weekend video that you had multiple days here of consolidation, and to think about when this big emotional day's range breaks, either to the upside or to the downside, there will likely be follow-on because all of the other people who bought in here or who shorted in here, one of those groups are going to be right and one are going to be wrong. And listen, a lot of people were very bearish in this instance. I had posted a damn, I should have pulled this up, my sentiment gauge. I had a sentiment gauge and about 10, almost, I think it was 9 points worth of bulls converted to bears, which I said at the beginning of the video was good for the bulls. And I also said that if we had gotten above this high, and I mentioned this being in no uncertain terms, I try to keep it interesting, but I said that if the bulls, and I said this was more likely than I think people thought, the bears would be met with, quote, fire and fury. Speaking of fire and fury, we're going to talk about that in a couple minutes because I just saw a headline about North Korea readying a missile test, but we'll talk about that in a minute. Anyway, look at this gap. When this sort of action happens, everybody, first of all, this is an all-time high in the market, right? Every single person who's ever been short is wrong immediately. Particularly all of this down here, all of the people who got, a lot of longs got washed out. The market wasn't in as much of an overbought condition. You had tons of people still stuck in short here, probably adding when they saw the lower high. And now you have this gap and go above the all-time high. You got to the progression line a bit, and then the last 2 days, you can see you had another gap, and then today, early weakness was bought up again. And I wanted to show this I mentioned that I would show this in the chart. Someone just asked, yes, the chart version of this will be on my subscription channel, however long it takes to upload after this broadcast. So keep that in mind. If you're not a monthly subscriber, you won't be able to see this. I may make it available for a la carte purchase. I did the last time, so we'll see if I'll do that. But I'm really trying to gear the midweek videos more toward subscription only. All right, so take a look at this. This is what told me, and this again comes with years of experience. I keep in mind, I've been trading for 20 years. I've been trading since I'm a teenager. I know I look very young, but I'm probably older than most of you would think. Getting a little scary, actually. I'm going to have a birthday coming up in a couple of weeks, which is freaking me out. But look, this is all short covering here. Again, they realize they're trapped, and it comes up here. You have a bit of a consolidation, kind of poor high light. There were, I think, a couple of ticks excess here. Overnight, inventory gets itself nice and long again. You have a gap, initially a pullback, because look, we had a rich close, right? Here's your VWAP down here, but it's stuck on trend. And all of the people who have been trapped in this short, look at this. You have a pullback they can't wait to cover. They cover it up here, another pullback, thank you God, and boom, up into the highs, into the close. Now, here you made a new all-time high in the overnight. Pullback though, inventory got itself nice and short overnight. But again, all of these people are still so damn short. I feel like that, that conversation that they have with Gene Hackman has about the Duke of Death, right? Bob was still so drunk he couldn't, aim right, and two-gun Corcoran. Anyway, so they were still so damn short they just can't get over it, and whammo, again they hit the bid to cover, and that's what's been going on the last few sessions. All of the people who have been trapped, and we'll go back to SPY because I'm a SPY kind of guy. All these people who were trapped are dying to get out of it because they're all wrong. The market's at new all-time highs. Now, here's the question. How much higher can we go? So I haven't talked about new levels in a while, but we will. I had one initial projection. We didn't quite reach it this time, but 250.32 was a measured move I had. I think it was like twice this range up. So let's do that type of math again with this area. I'm just showing you how I do this with these charts. I'm going to actually I sometimes write these in. I should probably start doing it with the Fibonacci tool so that I can we're going to add in the 1.618. We're going to take these out. I'm just showing how to do this with the Fib tool. I think it's useful. I usually, believe it or not, if I'm not doing this live on a broadcast, I just do it with the calculator to keep it simple, but I will do it with the with this tool to just illustrate how it's done. I often add a curve because they don't have the 2 times the range. So I add that in, I make that like little red, and then the 2.618 is the big red. That makes sense. And then 1.618s are usually a red, but I've been making them like a purple because the market has been blowing through these levels like crazy, right? So here you go. We have Fib extensions now. This is a longer time frame Fib. You can see that's from back here. But if you add these Fibs in of this range, the 1.618 is up at 253.25 and almost 256, the 2 times range. Now, does that mean we're going to automatically get there? Not necessarily. Is it possible to have a liquidation break and fill in some of these gaps or retest the breakout area first? Like, could we roll over and then go? Yeah, sure. Why not? We're also at we're also at the 250 range. I'd have to look, but I'm guessing that's a big strike, right? It's a big visual round number that I think traders have been kind of a little anxious to sell. We've been putting in some poor highs here. You can see there's no topping tail excess, so it's possible you get the rollover before the repair. Keep in mind, it's also possible that all of these people got themselves still so short, they haven't likely covered. We could just keep going if there's no news. Now, I mentioned in the beginning of the broadcast that there is a potential here with North Korea. That has caused liquidation breaks. I've noticed over time, though, as the market starts getting more and more comfortable with the same event happening again and again, the response from the market is less and less. Like we had the North Korea nuke test, and the market really didn't bat too big of an eye. I mean, granted, it happened over a long weekend, and you had some time, but I mean, this wasn't really the be-all and end-all. This was a much smaller candle than this, and look, I mean, it got bought up pretty quickly. So yeah, there could be an initial jerk down or whatever if there's a nuke test, particularly if it's a missile test. And it happens regular trading hours. Could the algorithms take us down? Yeah, absolutely, very possible. But I can't see that being, we've seen this before. The response of listen, if they hit something, like if that missile hits something, that's all bets are off, and now you're talking about, the potential of a very large correction. But if it's just the same old, it's probably going to be met with the same old. I can't see all the people who got hoodwinked into this before, looking to, have it happen to them again. I mean, they are in serious pain here. Everyone who's short is in serious pain. So that's why I wanted to explain. I had discussed over the weekend that if we got this gap up, and you could have traded in the futures or whatever, anything over this, the futures trade overnight, they weren't this high when they initially opened either. I had said fire and fury, and that looks to be what's happening. We are over a progression line, though. Look, from this high here. So movement above that in the past has been met with some corrective action. So should, if you're not short, if you're looking to initiate long, should you be piling in and chasing it up here? Subjective. Some people will tell you, there's going to be big, moves to come. I tend to not like to be a chaser. I always talk about having great trade location. The right day to have bought was either on the open here, for sure, over the 248.33, and that you have good trade location. You can keep trailing up your stops. And what do I mean by that? Just keep putting them below the prior day's low, or if you want, to be a little bit more aggressive, I think you could give it a little bit more room. You could do like this, use this like 249.42, that low, to me makes a little sense. I really think that this could pull back, retest, but listen, the price action so far is good, and we're seeing some follow through in some pretty big stocks. And like I said, keep in mind who is in pain. These people, all the people who shorted and sold in here, are in a lot of pain. All right, let's talk about a couple of other stocks. So we had an Apple event this week, and I want to give you my take on it. You'll never hear this from the intelligentsia on television. So they skipped the iPhone 7s. They came out with a iPhone 8 and an 8 Plus, of course, which is the bigger version, and then the iPhone X, which is the new and improved iPhone that you can look at it and it opens up the screen with your eyes. You don't have to use your fingerprint anymore, and it has some augmented reality. You can hold the phone up. It's like that Pokemon Go, and you get to see whatever it is you're doing, and it has some fancy camera options. The phone looks I'll tell you this, and it has the wireless charging, and it has the OLED, which is the better screen. The iPhone 8, listen, they had no business in my view calling the iPhone 8 an iPhone 8. It should be an iPhone 7s. It has a better camera. They added in the charging, and then I guess they put in a glass back to break even more easily. I remember that with the iPhone 4. It was a mess. Everyone I knew, except for me, of course, had a broken iPhone, the glass on both sides usually. If you drop that thing once, it's usually troubling. So that's the story with that. Pure marketing, calling it the iPhone 8. This is a pure play at maintaining stock price and to increase sales. Now, there were a couple of things I noticed about the iPhone 8 and the 8 and the 10X that have me a little bit concerned, and we're going to address them now. First and foremost, is I did the math. Based on a new iPhone 7, when it first came out, the 128 gigabyte model, by the way, Apple's margins, how they make their money, and they make a ton of money on their phones, is made a lot on the memory. How much memory in the phone. Usually it's 32, 64, 128, and maybe 256. This time it's 64, no 128, and you have to jump up to 256. Now, if you have a 128 megabyte phone like I do, you're not going back to 64. Not with this selfie and all this, I record videos and stuff, 4K. Now, there's no way you're going down. They're forcing you now to go from 128 to 256. So that's a big margin jump. How much does that come out to? $9 on Verizon, $9.17 per month for the iPhone 8, and a whopping $19.58 more per month for the 10X, or the X, just the X, the iPhone 10. So that's a big difference. The Galaxy 8, for comparison, because it doesn't matter what the Apple is doing in its own state. Let's compare it to the competitors. Their 64 gigabyte version, and that's all I see it comes in. You could add memory, I think, to that phone, is $40 a month. The iPhone 8 is, I think the exact number, it's like $10 or $12 more in a total number. So the iPhone 8 is expensive, and the iPhone X is very expensive. Problem, correct? Not necessarily. I don't believe that the iPhone X is really going to be considered a mass market phone yet. I think the technology is new. Apple is delayed. They're pushing this thing out into November, right? There were rumors of a delay, and apparently there is a delay. Do I think it's going to hurt the sales that people are going to automatically go to another phone? Very unlikely. I think people who want the 10, the X, they're going to get the X. So I don't think it's a mass market phone. I don't think they're going to be able to produce enough of them for there to be like the thing sitting on shelves. I think that you're going to wait weeks and months to get this thing. And by the time they get to next year's model, that will be the mass market phone. The price will come down and it'll be affordable to everyone. So why not just wait? I think, and I'll tell you, I upgraded from the 6 to the 7. It was a huge difference in terms of performance and speed and camera. And the difference to the 8, which looks frankly fantastic, the wireless charging alone is really great, will likely be enough to get people to go from the 6 and the 6S up to those up into the 8 and maybe into the 10X. The 7, I don't know so much. Honestly, I'm debating maybe keeping I have the plan where you could get the phone every year. I'm debating waiting and then getting it because I don't really feel like upping my monthly that much. But I mean, percentage-wise, I always look at it not the total dollar amount-wise, the percentage-wise of the bill increase is a lot. I mean, it'd be like taking my cable bill and putting 40% on top of it. Wouldn't be so happy about that. So that's the state of this. I think that people who are in older models will probably upgrade. I'm not so sure about the 7 model, although people who increasingly do like the plan like I had might do it. So that's sort of my take on it. Someone just said, "Oh, Android for life." I made the analogy the other day that the Android phones are sort of like buying a fake Rolex out of a briefcase from those guys who sell them on Fifth Avenue. It's just a wannabe phone. It's the wannabe Apple. I'm sorry, I don't mean to insult people. I've tried Android so many times. They usually get returned immediately. They get hot in my hand. It's such a disjointed experience. Anyway, I know people love them. If you like it, listen. I'm not the be all and end all. I prefer Apple. If you prefer Android, get whatever you like. I'm getting a bad connection reading. I hope this isn't going to screw things up. So they also have the watch that's out now with the phone built into the watch. So here's the scoop with the watch. I think that is eventually going to become a more mass market item with what they have. It's still a little bit too expensive. But keep in mind, the iPod has kind of gone the way of the dodo because everything's into the touch and the phone. Most people have the phone. I mean, I used to have tons of iPods. I don't even use them. But the phone now is the cannibalization of that, and now the Plus is sort of cannibalizing a little bit on the iPad. My take on that is that the watch and all of these other products are to make up for the old iPod. The Apple really makes their big bucks on the computers. Every 1% market share is like $1 billion to their bottom line. They make a ton of money on their hardware, their computers. I made the switch a few years ago. I'm a big fan of Mac. It works well with everything. It sort of syncs up well. The phone is a big contributor. They are using that to push their other product lines, like to get you into their product line. And once you're in, you really, it's like now you can't leave, like Sonny and Bronx Tale. Now you just can't leave. With like the bikers, right, in the bar. Remember that scene? It was amazing. I'm going to talk about Apple technically for a moment now too, if it would actually load. So we'll do the chart in just a sec. So that's my take. I think the watch and all this is just supplemental stuff. Incrementally, by the way, I think the watch, you pay like another $10 or something. I'm sure T-Mobile is going to do something crazy and give it for free. But for AT&T and Verizon, this will be an incremental boost. People upgrading phones will use more data, and if they buy the watch, which I'm sure they will, that will be an added bonus. It'll start adding up. Now, as far as holiday, we're going to get to the holiday season in a moment. let's just talk technicals in Apple for a minute. This was the event day, and you can see it peaked intraday, it pulled back pretty hard, then it rallied into the close. Then today opened up basically at the earnings high of day, dumped hard, bounced, played around with the lows, came lower, bounced into range, again lower, but with a higher low. See, I put this in here, intraday, and then it just came up and just started flagging here. It tried to test it again, bought up, bought up, bought up, and around here is when I said that's enough. I had a short position on, and I covered it, and I said that this is how I had it on. In October, I was short the 165 calls, long the 155, 150 put spread. So it was a bearish risk reversal with short calls above the all-time high, and then long a call spread for a move lower. But what I did was leave on the short puts. I closed the short call and I closed the long put. So I have a small long, nothing major on in Apple, but something was wrong here, and often you'll see me say that a stock is not trading properly, like I did with Disney. I'll mention that a little bit later, and I'll show you what I was seeing in there. But this started rallying, and then this is when I think people realized what I was seeing, and then it kind of leveled out, and you can see it's just sideways now in after hours. Now, Apple technically, if this gets back below here, I'm going to re-up that short again, below the 158.77. I will resell those 165 calls, rebuy the 155 puts, and I'll probably add it on in larger size this time. And then I'll start pyramiding as it cascades lower, particularly if it took out today's low. I'd initiate it again here, maybe even below these bars, and then I'd start adding below these for a pyramid type of a structure, meaning I'm getting larger in a position that's working for me. However, if Apple does get back up above and maintain above 160, and above today's high of day, this today could have been the look below and fail, and now it's going to rally up into the launch, right? One of my buddies messaged me, Raj messaged me today about, Apple, once they release their pre-sales numbers, maybe the stock will rally on that. He's expecting a bounce. I'm not sure if Apple does release the pre-sales numbers anymore. I know that they used to, but I think that they might not anymore. If someone knows better, please let me know. I don't pretend to know everything, all about everything, but just about most. So above today's high, though, I'd be probably either selling more puts, more likely than selling puts, though, because IV is low. I'd be looking to maybe buy a call spread. So I'd be short puts to fund the call spread. It would be like an absolute reverse of what I had on today. See, Josh said he didn't think they did last year, right? I don't think they're doing that anymore. I don't think they can do it anymore because they sell through. It used to be years ago, by the way, and this could actually be a downer. I think last year people were negative on Apple because there weren't as big lines in front of the store. They sell a ton of these things now online on their website. Really, that's what I'm going to be looking at, to look at the date, how many weeks until delivery, right? Last year was that jet black one, and that was sort of the gauge. That was sold out, and it was 6 weeks out or something. You don't need to wait on the line in the store anymore. So you can just buy it online, and then they're on so many carriers now. When they first launched, they were just on AT&T, then it was AT&T and Verizon. Now they're on T-Mobile and Sprint, and every Tom, Dick, and Jane carrier has the iPhone. So it's a little bit more broad. They're also launching on more and more carriers, like in China now. Things like the watch is coming out immediately in China now. Used to be all this long wait. Now it's all coming out very quickly in China. In India, they're pushing. These things are super duper expensive, by the way, in these countries, but they seem to be gaining some share, right? I know everyone talks about how poor India is, but that's their big growth market now, not as much as in China, as amazingly as that sounds. So that's my take on the iPhone and Apple with regard to how I trade it and price, and I showed you the fundamentals and the charts. What I'm super excited about for the holiday season, and I have a couple of them myself, and if you remember a bunch of years back, Apple came out with a product, it was called the Nano. It was a very small iPod, and it was super duper popular, and it was like the holiday Christmas gift for the ages. People would, if you wanted to buy someone something and you didn't want to really think too much about it, you'd buy them the iPod Nano. But now we don't use iPods really anymore, and I think they are killing off the iPod. But what is big and it's cheap is, drum roll please, anyone who's watching the subscription version already knows because I have the chart of Amazon already pulled up, the Echo Dot, the Alexa. And I better put her on mute because she is going to go crazy on this conversation. The Echo Dot is super cheap, and it is the gateway drug into Amazon. We're going to also get seriously deep into like what's going on in Amazon here. This is going to be the big holiday gift, just so you know. I had a girl I'm friends with call me the other day. We have a mutual friend who has a birthday party in a few weeks. And she's like, oh, what do I get, our friend? And she said, oh, I'm thinking about getting her Alexa. And I was like, oh, yeah, that's a great idea. I mean, I control my lighting in my apartment. I do all kinds of wild stuff with Alexa. It's cheap, and it's a really cool gift. That is also, this isn't just me just speculating. On Prime Day, that was the number one selling item on Amazon, was the Echo Dot. They sold a ton of them. If you go into Whole Foods now, they're selling Echoes. We're going to talk about that in a moment. But this is going to be the big holiday gift, and I think people are starting to realize that, and Amazon is back to the upside a bit. It's also very rare for a stock to come from an all-time high with a channel high touch, sell straight off to the channel low, this is where we talked about buying and then adding on the channel break, by the way. Very rare for that stock to not at least rally to make a lower high. That's my take. So a couple of things to talk about technically with the stock. One is that we have this very defined channel, and then here we have a trend within a channel. Right? It means that it's getting steep. The move is getting, to the upside. But it broke down here, kind of tried to retest, and then came down to finally I was a little worried here that we weren't going to get the channel low, but we did get it. Then I actually added on this day. I didn't get the dead low. I actually added right around this day's low, so I took a little bit of heat here, but was rewarded quickly. And this kind of was like a mini secure low, right? A low bookended by two higher lows, and then we were up to the upside. And then I had said that my first target was the 50 MA, and it blew through that like a hot knife through butter. So if there's like early weakness tomorrow, I think there's a right or right out play on the 50 MA. The best thing I could see tomorrow would be for this to like have a small inside day and then close with like a little doji near the high end of the day's range. That to me, just like this, would be phenomenal, and then maybe even like flag out for a few days and then go. However, if this does just go, look where the 50% fib is, the 109.82. It's right on the backside of the old trend within the channel. I love when a plan comes together. So this would be where I'd be looking to, yes, book some profitos. It's possible it gets to the 61.8 and challenges the gap a bit, but I'll start lightening it up into here, and at the very least trailing up stops. If you lose today's low of day, I would probably stop out of the whole shebangs as well. So those are my setups for Amazon. Now, Amazon, everyone's talking about, since the Whole Foods merger, who Amazon should and shouldn't buy. I happen to be on the record today saying I think they should buy like a company like The Gap that has a big iconic brand. It's been underperforming, and that Amazon's online sales could be synergistic for sales volume. They could probably lower the price with it and Banana and sell a ton of that stuff as directly. They should start acquiring brands and selling directly. Their margins would expand huge. They have the shipping outlets. No, they should not buy JCPenney. Nobody should buy JCPenney. No one should buy any of these department stores. I think a lot of these department stores will go private. Nordstrom's is already talking about that. Macy's may be the next one to do that. Although that stock wasn't up as much as it really should have been today. But I think they should buy iconic brands like the Gap and stuff along those lines. Now, what they are doing, and this is what Whole Foods is about. They don't care about being in the grocery business. This is all, and I tell you all, about pushing people to Prime membership. It's their ecosystem. They want to get you in that ecosystem like Apple is. And once you're there, they don't let you go. That's what Alexa is about. That's what all of this is about. It's to push you to become an Amazon Prime customer. You pay them the monthly. I'll tell you, I did a few years ago, I did a project. It's already a long time ago. I was in an accounting class, actually, and I was doing, this was my business school days, and I was talking to my professor, and I came back to her. It was a question about Walmart, actually, with Sam's Club. And I said to her, I got the answer, but this can't be right. So she said, why? What's wrong with the number? I said, this is a quarter of the entire population of the country. And she goes, holy cow. She's like, no one's ever noticed that. I said, yeah, I mean, you're telling me 1 in 4 people are members of Sam's Club? She said, I guess so. This is exactly what they're going to try to do. They want to get you hooked. They get you in with you get this video streaming, you get the 2-day free shipping. You're now going to get deals at Whole Foods, and Whole Foods customers are very similar to Amazon customers. And one of the things they had really been lacking was a good fresh food delivery outlet. You go in there now, by the way, they're selling Echoes. Pretty crazy. I don't know how many people are going to buy it, but hey, anyone who buys it, it's found money. So that's what they're doing, and I think that's what they need to start, what they will continue to do. Now, there's a couple of implications for this that I'm going to discuss now, and this may seem controversial now, but it will be likely consensus in the next couple of years. So the first and foremost thing is you have to win the war before you can rule, right? And Daenerys is learning that. She has to now first defeat the Night King and then Cersei, and then she can rule. But to do that, you actually have to go into battle. So they are going to be acquiring brands, and they're going to be slaying it. My take is that initially, this will be very positive for the stock as they're picking up shares. Later on, and this could be years down the road, it could be months down the road. I don't know, maybe some analyst who pretends they don't watch my videos, maybe some TV stars, quote unquote, who pretend they don't copy my levels unaccredited and then block me because they don't like my political views, but that's a whole other conversation. We'll see this and come out with it immediately, but you're going to hear it here first. As Amazon gets into these old line businesses, it becomes a larger and larger percentage of their pie of Amazon. That will mean eventually, not now, but eventually, their multiple will need to compress to reflect the fact that they're not as big of a growth company anymore and that they're in old line businesses. At this point, Amazon will be wildly profitable. They may even be paying a dividend, as crazy as that sounds, and they will be the undisputed champ. Everyone keeps telling me, who's going to be the next Amazon. There is no next Amazon. Amazon is the next Amazon. No company can sustain years, quarter over quarter over quarter. Look what they've done to IBM, of losing growth and money to build out what Amazon has built out. Their distribution network, their brand, it's a brand. Everyone knows Amazon. And to build an Amazon, it's not going to be cheap. It's going to be billions of dollars. People aren't dummies paying, this huge multiple for Amazon because, they're stupid. It's because it can't be replicated at this point. It's gone too far. And maybe like 2012 or 13, maybe then, if people really hit the jets, then they could have done it. It's too far gone at this point. It's just is what it is. Retail will survive. There'll be a place for these stores, but Amazon is Amazon. So that's my take. Initially, this will all be very positive for Amazon, but at some point later on, this will also be a bit of an Achilles heel. Now, the caveat to that is, will Amazon grow into the multiple? Will they be so big at that point that it won't be, whatever multiple they're trading times earnings, that it'll even matter at that point, that they'll have made up so much money. Yeah, someone just asked me about that Jet.com for Walmart. That was a complete waste of money. They're never going to do anything with that. Walmart is going to try to compete on price with Amazon. And I heard a couple of people on the boob tube saying that Walmart may be able to steal Amazon customers. Most of Amazon customers probably have never stepped foot into a Walmart. I'll tell you, New York, there's no Walmart here. So, but there is Amazon. I'll tell you, the holiday season, I was looking at the UPS trucks. I live in a very large building with tons of deliveries, and I live in the city. And I was watching a guy was stopped at a light to go over the bridge, and he was unloading the truck. At least 80%, maybe 75, 80% of the boxes on his truck were Amazon boxes. It was like an aha moment. If you're out ever and you realize you need something, I have this happen to me all the time. I order on Amazon. I go into stores. I shop for things and I see them cheaper. I always check Amazon. Sometimes I haven't even left the store and it's already, being on the way from Amazon. So this whole notion about the next Amazon is Amazon. Just that's it. So they're going to have a great holiday quarter. I would think the Echo. This is also one of my big points of concern for Apple, by the way, is that they're falling behind now on the home integration. That's a thing, and they really better get on it. I think that Apple should buy Nest. They should have bought Nest. I think it was bought already by, I forget who bought Nest, but that was the guy who created the click wheel, by the way, for the iPod, and now it's owned by, I think, Google, actually. I think owns Nest. So they better really get on this, and I know that Wink, who does the Smart Hub, Will.i.am just bought that. I doubt that he'll be the last and final owner on that. But that's the next big thing, the move for the home, and Amazon is leading pretty heavily in that. I know Google is also stepping up. They have it, but their device is more expensive, and it's not as good from what I understand. I know people who have both, and they prefer the Amazon. Also, Amazon moving into the Apple TV is an incremental plus for them. One more big macro theme I wanted to discuss. Actually, I have a couple of more, and then I think we'll bang through a couple of stocks. The CNC buying Fidelis Care is very interesting to me. That didn't get a lot of coverage today. They are a healthcare company, and they bought Fidelis. Fidelis has they have a fairly reasonable priced health plan as compared to health plans go. They're not it's an interesting company, but they also have, and this is where I think this is why you watch me. They have a huge percentage of Medicaid patients also. They have a Medicaid plan. And what the acquisition that CNC was willing to, at this point in the game, pay up for Fidelis tells me two things. One is that healthcare reform is not going to look like what we think it might look like. Two, that there's actually three parts. Two, that there's going to be a huge push probably to get Democratic votes on board to, I don't know if they're going to repeal Obamacare, but they're going to fix it at some point. I think that might be the compromise, just to keep the name or whatever. Put a huge push of people into Medicaid. And the third one, and I don't know if this is going to happen under Trump, but I'll tell you, I think this is going to wind up being a disaster. But I do think eventually where they are heading is to the single payer model. This to me was a huge alarm bell that went off today. That's the direction that we are moving into. I don't want to get too political or get too into this, but the single payer issue to me will be a disaster. We've seen it with the VA, all the scandals, all the people who can't get to see doctors. It will be like the Department of Motor Vehicles running your health plan. Just you wait. But that seems, unfortunately, the direction that this is going in, that this buy today told me that that's the direction we're going in. Hurricanes. Interesting thing about the hurricanes. So Miami was an underperform, right? It seems like it was okay. Not as much flooding. It was more of a wind event, I guess. It was very windy. but it was a little better than expected, and that will be a big rebuild effort as well. Miami was an overbought real estate market. I've been actually talking with some of my family about buying a condo out there, and this is sort of what I was waiting for. I've been saying, I shouldn't say I was waiting for a natural disaster, but I was waiting for some type of an event to knock prices down, and I think this could just be it. Way overbuilt, but they are going to have to do some rebuild. The one that's more important to me was the Harvey in Houston. That was a disaster. That was the true real Megillah. A lot of flooding and a lot of cars damaged, a lot of homes damaged. I have to do a little work to see how this is going to affect potentially banks, to see who has mortgage exposure in that area, because it could lead to a series of defaults, although I do think the federal government is going to step in and do something. I don't think it's just going to be, people are going to hand over their keys and their deeds so quickly. But this is going to probably stifle the peak auto. I had said to buy Volkswagen, VLKAY. That was the one I had said a couple of weeks ago, before this even happened, and it is doing well, right? It's up near the range high here. Today was a bit of a reversal bar, not particularly loving that, but this could work its way up to the old reference low here, up at 35.33, and like this channel it's in, kind of. The upper end of this channel is really yet to be proven. I do have lows drawn in here, you could see, and I drew in this channel. So this channel, the secondary channel, is proven, so maybe there is a little bit more room higher. I'd be looking to probably lighten up on this into the strength. Longer term, this probably could see the 50% fib up at in the 37s. I'll show you why. I'll just do 20 years because I don't really want to have to go back and play with this. This spike, by the way, was that whole Porsche fiasco when they bought Porsche, however you want to pronounce that. And there was this huge short squeeze that caused Volkswagen, for a very brief moment in time, to be the most valuable company in the world. Crazy, right? So from this peak, the lower high peak, to this low, this trough, look where this, let me get rid of this for now. Look where this reference low was, and look where this kind of breakdown really took place. It was the 50% fib. So that's where I think that it's also the gap fill. I think that that's where it's headed eventually. They make products that people want and buy, and I think they're through a lot of the government overhang, and now you can see like Ford and GM are struggling with these emission issues. So Volkswagen is my favorite of the autos to buy on dips. Second, of course, to the Mac Daddy of Mac Daddy momentum stocks, Tesla. This thing is just a total monster. I always say that people find all kinds of in creative ways how to lose money in the market, and shorting Tesla has been one for sure. So my take on Tesla, look at this. It's a really nice trend break here. You do have some reference highs up here, so I don't know if ideally you'd get a bit of a dip situation to buy, but it seems okay as long as it holds the 20 MA to my eye. Look, that's been the MA that catches it. So as long as this holds a 20 MA, I'm all right. If you want, you could even sell some out of the money puts, maybe down at these reference lows or down like near the 50 MA. There's also a, if you're going a little bit longer dated. They have earnings coming up. My guess is this will squeeze more into the earnings. We'll see. But as long as it holds a 20 MA, it's still sort of okay. I would even move that up, though. I wouldn't give back more than half this week's breakout. Let's go into the daily. I'm realizing I'm in a weekly chart. I'm like, this doesn't look right. So look at this. Breakout and just holding up like a boss, right? A BOSS. So half of the breakout day range, as long as it holds that, like the backside of the trend, it's okay for more upside. This looks just like a bull flagging out. I think a lot of people probably got sucked in short into here with this 50 MA hold. By the way, that was a 20 weekly MA. That's been really the key MA. For the stock, the 100 MA and the 50 have been the key support. So any pullback into there could be a right or right out long, but I'd be a little bit more smaller size, considering that would be then a failed trend break. This theoretically should now float up to the highs, though, so just keep that in mind. Could use half half of the break at the 9/11 day bar as a STOP. Anything below that to me is iffy. I don't know if I'd go short, but that to me would be problematic. So we just covered one on the list that you all wanted to talk about. Back to the hurricanes briefly. I'm calling this, you've heard of repeal and replace. I'm calling this repair and replace. This is going to be a huge boom. First of all, short term, the hurricanes are negative for growth. They're going to compress growth and it's going to come in. That is also going to stay the hand of the Federal Reserve. That's right, peeps. Lower for longer. So you could do lower for longer, right? Anyway, they're going to come out next week, I think, is the Fed. We'll see what Premier Yellen has to say. I think she wants to keep her job, so I don't think she's going to get too crazy with us. September is totally, in my view, off the table now. No way they're going to be. No way they're going to be holding. Raising interest rates into that, and I would be very surprised if they mention the taper. I'm sure they're going to mention these national disaster criteria as a reason to chill, take a chill pill. I don't know if December is going to be off the table or not, but they probably are going to want to see how this plays out. There's also a lot of geopolitical risk with North Korea. There's also the possibility for still more hurricanes, and there's also the probability of nothing getting through, right? Like tax reform and so on and so forth. So I think the Fed should be on hold, but we'll see. I think December is possible. I don't necessarily think that we're going in September. I'd be really surprised if they mention the balance sheet and all that. They're going to have to say something. But I'm guessing they're going to give you more of their, their double speak of, let's see, we'll wait and see. We kind of hope to raise rates, but it's conditions dependent or whatever. But if they don't mention the storms, which they have to at this point, it would be amounting to incompetence. So they will definitely do it. Let's go from reverse order for once, just to keep it pithy, right? Costco. All right, so this got nailed on Amazon Whole Foods. You have a double bottom in place, and it looks like a W pattern. I've said, and I'm going to stay consistently, if this thing has to stay above the 200 MA, and this high for the most part, this 160.66, that was this reverse dump day low. Anyone short in here is not a happy camper today, I'll tell you that much. So there's two caveats here. One is that this stalled on the 100 MA, and this 50% fib, which is sort of like the day that it gapped. Anyone who bought in here has probably been waiting to be made whole. There's an old gap fill there. Look, the 61.8 is right at the start of the gap, so maybe it could press up into there. The question you have to ask yourself here is, do you have amazing trade location? The stock is already up, $14 off the lows, and you're playing for, the last, let's see, $2 to $6, I guess. What was the close today? Let's just say 70. Let's just say 163. It's just close. So you're playing for the last, I guess, $7, $2 to $7, $3 to $7. It's a little less of, in my opinion, of a great trade as it might have been on this 50 MA hold, which I had discussed. If you were looking to buy the dip, that area would be important. So, good question. Let me put that up in big, bold letters. We will definitely talk about energy. I cannot forget that. Let's keep it simple with this Costco fabulous. If there's like an early pullback tomorrow to the 200 MA, you could use that as a buy the dip and then just stop out below today's low. If it's really literally right or right out. If it loses that, maybe play short for a trend touch. But this looks like it's going to hit one of these fibs, is my opinion. Maybe the 50, potentially the 61.8. I don't think it's going to be a straight line. We've had these moves before, but as long as it's above the 200 MA, it's sort of okay. We're working reverse order here. Let's do energy before I forget, and then I'm like, damn, I didn't do energy. Energy in XLE terms, which is working right now? First of all, a certain television guest who is like wrong all the time came on like right before this thing broke out and like talked about how oil is like never getting above 50 and 55 again. That should have been your signal. This is doing better, right? You have a 50 MA hold again. You're now above the 100 MA. And who is this? You gotta go. Someone's gotta get blocked here. Block. All right. So this looks like it's going to float up to 67, which was the breakdown and the reference high. You're coming up from the bottom, so I'm guessing this area is going to be an area to book some profits into. But this is, again, looking better. Listen, we've had these false breakouts before. I was really hoping this was going to touch down here to the 61.8, but it didn't quite get there. And now you're making some higher lows and higher highs. I happen to actually have a long on in this from the break. This is very weird what I had on with this. I had originally, on this breakout, put on a call spread risk reversal. So I had short calls, long call, short call, and then a short put. When this came down, I got stopped out of the short call. And then when this rallied, I got stopped out of the short put. So now I just have a long call on. So what I'm probably looking to do is rolling, which I'm slightly underwater on. The whole trade, believe it or not, is actually a net positive considering I'm stopped out of the upside calls. I think there were 70 calls, and then I stopped out of the 61 puts, and now I think I'm long 67, if I remember correctly, calls, which are a little underwater. So what I might look to do is this rallies up is roll the trade. So what I might do is sell that call and then buy a longer dated call spread, and on a dip, if there's a decline, then sell the put again and kind of re-up it for no charge. That's my story with that, the skinny. This is how we do. This is going to depend, of course, a lot on oil. We know, for some reason, people thought the hurricanes were going to be negative for oil. I was like, all right, I guess the price went down, but I was like, this makes 0 sense to me. And sure enough, I wound up being correct. This came up, look at this, right to this is the breakdown. This is the area of major resistance. Look, moves into this area have been unsustainable. We chopped a lot here. Now you have a trend break, a move up, a pullback to a higher low with a 50 MA hold, look below and fail, and now we're right back up on it. So you now have a channel here, right, with a lot of consolidation and a failed breakdown. So the best thing I think they could do up here is just kind of maintain the rock up here at 49 and then go. At some point, I've said this for a while, I do think we'll see 65 again in oil, or 62 to 65. It's not going to be right away, and it's going to take a while, but I do think at some point we will see some. I don't know what's going to happen, but there'll be some reason that this happens and it'll eventually go higher. But it needs to clear and maintain 49, above 49 strike for anything like that to happen. The best scenario I said this could do is just flag out here with time and then kind of go, because you've moved up a lot. You did have the pullback, so this to me it looks better. I'm thinking it looks better. Let's look at Exxon quickly. And I'm going to have to wrap soon. We didn't get through enough of these stocks, but I love doing more cerebral videos once in a while. Exxon, look, broke the trend for the first time in a long time, right? This was poor lows. It kind of tried to look below, and now it's bouncing. This was like a look below the channel and failed. It's got a lot of resistance right here where this sort of really broke down from in the 80-81 area. So that's where I'm looking to see this go. I'd be looking to book some profits there. Maybe it squeezes up to the 200 MA, but I'm a buy the dipper again in Exxon as long as it can hold above the earnings day low of day, which was 78.27. That's sort of mid-range here. That's the meat of this body here. As long as it holds that, I think it's all right on pullbacks. Below is very problematic. The NVIDIA, maybe we'll end on NVIDIA, right? NVIDIA, check this bad boy out. Again, another 50 MA hold. We're right on this downtrend area. This is a wedge to me that this is forming, and it's going to break really hard one way or another. And what ideally, I mean, it never really works out exactly how you want, right? But if the ideal scenario would be to pull back one more time to this area and then kind of go. Like, look, you got up here, there might be some responsive sellers, you'd clear them out, and then it's like free to run. I don't know that what the other scenario, and this is highly likely, and I could totally see this happening tomorrow if the market's up, is that this is like a gap up and go through the trend and through the old high. Like if there's some kind of like upgrade or news on Nvidia, everyone in here who's trapped short is just dead, right? They're gonna be roadkill, and this would just like beast to the upside. So any like gap up above these recent highs here, like 170, 190, it's gonna be a hard thing to buy, but I'm pretty sure that will be another one of these fire and fury trades that just like rips like to the upside, and you're sort of like, oh, that seemed obvious, right? You have a bit of a channel here. Look at this. You're just like consolidating. This could really easily get, that giddy up to like 180, close to the 200 mark at some point. So just keep this in mind. Any gap up in this tomorrow, I think, will be chaseable. I usually say don't chase. That I do think would be chaseable for a right or right out play. I mean, if this thing is like, if it opens at the channel high, I don't see why it would. That's not a chase. But if it's like a minor gap up or just something over these highs, that I do think could be a trade. So how would you manage that so you don't get burned if it reverses? Very easy, very easy. You have an opening 15-minute day range. You'll have a pre-market day high of day, and you'll have a regular trading hours high of day. So what would you be waiting for? A break of the pre-market highs to keep going. If it makes a lower high and can't get through that, you don't touch it long. And if you lose the 15-minute low, you could even use a 5-minute low. Some people like the 5-minute low, but if you lose the 15-minute low, you could even try it short. That to me would be, it's a failed attempt. So that's sort of the mechanics of how to play something like that. It all seems really obvious after it happens. That's why you have to do things like anticipate for situations like that. So that's NVIDIA. We're over an hour at this point. I have the list of what you all want to talk about. So this could be my big tease for people to tune in for the weekend review video, because I will cover almost all of this with maybe one or two exceptions because they're like nothing stocks to discuss. So that's it. If you missed this video and you want to rewatch it, it'll be on the channel. The version with the charts, which I always suggest seeing, although we didn't do as many today as usual, will be on the subscription service channel shortly. The link to that is in my Twitter account. You go to @JustinPulitzer, you click on that YouTube, you sign up. 2 weeks, you get 2 weeks free. If you think I suck after 2 weeks, just unsubscribe, you won't be charged. After 2 weeks, it's $49.99 a month. Listen, all you have to do is catch one of these trades, and you could pay for your subscription for the month or even the year. So maybe even longer if you have a big enough account size. Hope the video was helpful. I enjoyed doing it. I like getting a little bit cerebral once in a while. Thank you for all the well wishes. I'm doing a lot better. My recovery's coming along well. I'm even able to use the arm. I was pumping gas the other day, as crazy as that sounds. Nobody tell my doctor that. I think he'd flip out. He actually watches these videos, though, so you probably just saw that. Anyhow, have a great rest of your week. I'll see you on probably Saturday at some point or early Sunday with the weekend review video. Have a great rest of your week. Cheers.